Is the bill that's been put together for infrastructure actually going to infrastructure?
Yeah. The last question is kind of a little bit humorous because when 2009, after the global financial crisis, there was the whole infrastructure bill for stimulus. And it's like you can't really have that for stimulus because it's going to take a few years really to start to happen. And then it goes on. They needed something more immediate. And so back then it was shovel-ready projects. And for steel, I used to joke that it was all the road signs that we would see that, this lane pavement is from the stimulus bill. But now I think we have a real infrastructure program, and it's really been put together well. It's starting to get worked out. We're seeing more evidence from the aggregates people. I think some of the road work is coming. We're seeing more quotes for bridges, which is steel plate. We're seeing a lot of long products are going to be finding some benefit, whether it's some of the structures being built, some of the road work, just your general infrastructure, but it will support a lot. It's gonna still take a little bit more time yet, but we're seeing some benefits this year. Many more benefits to come in the next couple of years, which is good because, as you said, infrastructure is aging. You need to continually reinvest in it to keep it up.
Greg Sheldon here, your host of Metal, Steel, Manufacturing, and Business Pro podcast, where you learn everything about the metals and manufacturing industry that make your modern day life possible. Right. Everybody, welcome to the show. Today we have a gentleman and a guy that is, it's about half an hour of stuff I got to read off about. No, it's not. I'm just kidding. It's not half an hour, but so Josh Spoores we have today. Thank you for coming, Josh. I appreciate it. Yeah, it's exciting for me. I got a lot of questions. Josh works with CRU, which is a global leader in data on the mining and metals industry, and among many other things. But Josh comes from Majestic Steel and many other ventures. He's a trusted advisor to Fortune 500 manufacturing companies, energy firms, investment banks, and hedge funds. He leads a lot of discussions and presentations that influence a lot of corporate strategy, right? And he's been on CNBC, Bloomberg, Wall Street Journal, video appearances, and has written for these media outlets. And he has a very strong reputation in commodity markets and the value chain. And he also manages a large group of people that are like him in CRU. So thank you, Josh. You are how did you get here, sir? I mean, how do you have such a great intro? I mean,
I don't know.
What's the journey?
I think you're going too deep on all that. Yeah. How did I get here? I know we had like the introductory talk. We talk a little bit about, potential questions. And there's a thing about how did I choose to be a commodity analyst or something. It's like, I don't know if anybody ever chooses that. It just kind of happened. Right. So I've been in the steel industry for 18 years now, with over a decade at CRU.
Yeah.
And I was hired at Majestic Steel, 2005. Spent 6 years there, and I was their market research manager, two kind of separate roles. And really where it played into what I really like and what I'm passionate about is markets, all things markets. I'm really excited about that. And when I kind of found out how data intensive they were, they're keys to success. They carry a lot of inventory. It could be a lot of speculative inventory, and it's understanding not necessarily who's going to buy it, but how much is the right amount to buy and at what price. And there's a lot of data that, decisions and gut checks that goes into operating a business like that. So I found that all just very, very fascinating, and just, like a sponge, just kept reading and learning and talking to people, and just moved on and on. So yeah, 6 years at Majestic. I had left there. I started my own market intelligence company for a bit, went to a domestic mill for a bit, Severstal in Michigan. I got recruited over then to CRU, and that's really where I've been here for the lion's share of it all.
Very good. Awesome. Well, I mean, I've gone through the CRU website and wow, you guys have a lot of information in there. So anybody that's looking to gather more, this is your man to talk to. So when you're talking about looking at markets and these sort of things, what are you looking at? Are you looking at like a pretty low level granular aspect, or is it high level geopolitical stuff? I mean, where do you gather that information, or are you putting it all together?
Yeah, it's everything. I mean, for just the market analysis, it's starting with the macroeconomic data points and understanding how important some of those are. There are things like industrial production is more important in the US than it is in other areas where, GDP can be your lead indicator of steel demand, less developed countries. But it's looking at all those is trying to figure out you're working a mental model on what's happening, why it's happening, where it's going to go. And then you have to replace some of those preliminary data or expectations with actual data. And as that comes in, it alters everything. And
Hmm.
it's really keeping, a finger on the pulse of a lot that's going on. So many times too, you'll see things that may not be connected, which is what I really enjoy about being at CRU is I can just go into our client website and I'll see, oh, copper's got a new outlook. Oh, there's a new outlook on fertilizer. And these are mined processed commodities. And
Yeah.
so many times I'll be able to just take a thought from one of those, a model, and say, this could make sense for steel. So looking at all those and what's that relationship from some of the various fundamentals.
That's so interesting. So you bring up fertilizer, and obviously all the things that are happening with Russia and Ukraine. We're all wondering, what's happening with all that, and how does it affect the metals and steel industry?
Right. Yeah, we had what is it, about a year ago now. It's the 1 year,
Hmm.
sadly, 1 year anniversary of this, and we had seen at that point in time steel prices in the U.S. and pretty much everywhere were falling and moving lower. You have the invasion of Russia into Ukraine, and then the reaction, the geopolitical reaction, was people were buying less and soon to be minimal levels, if not if any, of iron ore from Russia and coking coal and steel slab and hot rolled coil and other products that all of a sudden you have this massive shift and it has to happen fast to change trade routes, which is expensive, and to change suppliers. So you have a big disruption and it just jacks prices of some of those things up tremendously. I don't recall like pig iron prices, but I think they were they more than doubled. Steel prices in the U.S. I think rose by like 60% in a matter of just 6 weeks. So it
Hmm.
was a sudden change and disruption. So it's a challenge to try and keep track of all of that. But yeah, that it was a major disruption to metals for sure, and it's still being felt now. We've seen some of the cycle play out, but where we are right now, we're seeing prices still lift from mills. They're still asking for higher prices. They're getting it for the most part. But I think we're really just a certain level of demand away from, seeing how some of these changes in trade flows will keep prices higher than they typically would be otherwise.
Hmm. Hmm. Okay. So, so I guess where do you see things going when it comes to maybe not just pricing, but demand for the metals? Maybe just steel specifically in the Americas.
Sure. We had our view, our forecast, and the way we'll forecast it, we go back in time to having what looks like real data, and that's maybe it's 2 quarters ago. You'll have preliminary data
Hmm.
1 quarter after that, getting closer towards us, and then estimates. And what we find often, and less so in the Americas, but more so other countries, some of that actual data gets revised a year later, or preliminary data can have a big change. But based on what we had seen at the end of Q4, we had seen that sheet demand was, I think, was slightly negative for steel sheet products, and we had expected a slightly negative view to flat view for 2023. And what kind of has come out now as some of that data has come to light is steel production was falling faster than we had expected. And so the actual demand portion of that consumption, demand, mill shipments was lower than what we had thought.
Mhm.
And the way that works out into our forecast is rather than being slightly negative or maybe flat this year, we think it might be slightly higher just because there was an inventory destocking. We are seeing some increase in inventories. And then it's that big expectation of what happens if a recession happens, how does that affect demand? And that's what we're working through right now.
Okay. So are there any brands? I don't know if you can speak to brands, but are there any major brands, if you can name them, great, that are starting to ramp up for the demand? Like that, I mean, is there, how do they go to you for that information, Josh, or your team to
Uh,
know if they should ramp up, or is it kind of you reflect what's happening in the market, or do you predict these things?
yeah, I think some of our best clients, we have discussions with them in terms of what's happening. We'll talk with them about what they see, and I think what's really interesting right now is since the pandemic, we've seen a number of industries kind of reset the way they go to market. So
Okay.
steel is a great example, maybe the airlines as well, or OPEC, where they are no longer looking to maximize production to spread their costs out over as many tons as possible. They're now looking to be a little bit more specific in what they do and manage their order books because I think everybody's at a point where they're able to do that. It was a huge reset for everyone.
Mhm.
And so now it's kind of a different operating theory. I'm sure at some point they'll get back to that old model of what they did, produce too much. Um, but I think right now it's kind of managed production in a number of markets. And so we are seeing even, we'll speak with, I speak with the automakers, the white goods, yellow goods, all the goods, in terms of what's happening, what we expect. They'll give us some insight in terms of what they're seeing and some plans. But even for like the white goods, the expectation is they were having a tough year last year, continued tough year this year. But if you look at the IP data for appliances, I think some of the trends were picking up because they've been able to manage that production better. They've taken the bigger hit. And while they may not be at levels they wanted to be at, they're at okay levels and it's actually picked up a little bit.
Very interesting. So, with that being learned from COVID, what else did we learn from COVID? Is there anything specific these guys are like, oh, we can affect, the pricing in the marketplace? That's great. Is there other things, maybe in operations that they've changed?
Yeah, yeah, I think I'm less into some of that.
Okay.
But there's a number of lessons everywhere that people have seen. A lot of what I've seen is more so on just this whole cycle of
Yeah.
everything shutting down with the lockdowns and then things coming back, demand for things coming back so much faster than supply could come back. And then you have disruptions and weather and what have you. And yeah, I think we had a conference, was it end of 2021, August 2021, end of August. And I introduced the concept of post-lockdown price bell curve. And I talked about it as we've seen it with toilet paper. It just goes through the roof and then it collapses and lumber and iron ore at the time. And, steel was no different. And this kind of came as a shock to the conference because everybody thought, well, hot rolled's nearly $2,000. It's going to be at that level forever. We don't care about $600 historical prices. And we're still seeing that work through it. Oil was further out, natural gas is further out, but it's still going through that curve. Today, we're still seeing coal is still elevated. I think it's down by maybe 50% thermal coal, Newcastle, and it probably has another 50% cut to go before we're going to see some things change. So it's just seeing that cycle to me is really kind of magnifies what we should expect going forward. It's just being able to zoom in and see it very clearly now. We'll see mini cycles and nowhere near to this extent of what we had seen, but that's certainly, it's interesting to see the building blocks of what drove it
Yeah.
up and what drove prices back down.
Yeah. So, is it safe to say you've never seen anything like this in your time in the industry?
Yeah, that was probably the most played out thought, going through the pandemic was, they'd find, the oldest people you could find. And I guess I'm getting up there now, but it's everybody saying, yeah, in my 40 years, my 60 years, I've never seen anything like this. And truly it's a very unique situation.
Yeah.
But I think there's a lot of learnings that can come of this that could be applied later on as we go through somewhat similar cycles, but nothing hopefully like what
Well,
we've gone
hopefully,
through.
hopefully. Yeah. Yeah, absolutely. So in your career, without that disruptive event. What other things have changed in the industry that, you've seen with being so in it, your finger on the pulse?
Right. Yeah. Well, I mean, yeah, like I said, I was hired I think it was February 2005. So in 2004, you had a huge boom in steel. It was China's urbanization. They were all of a sudden soaking up steel from everywhere because they couldn't produce enough and they were building so much.
Mm-hmm.
And it was a multi-year, probably could talk about multi-decade type of thing. So that big boom in steel got me hired. And so I saw that. I saw, the declines in 2005 and the rebound and the global financial crisis. So seeing those in some cycles was quite interesting and eye-opening. But yeah, overall with the industry, we've had a lot of technological advances from the EAFs, the feedstocks they use, the quality that they can produce.
Mm-hmm.
It's really quite incredible to see, like with US Steel buying Big River, and as much as they talked about being impressed with the quality, they've then tested and sent their hot rolled coils up to their automotive grade processing lines and have said that they've got automotive grade steel coming out of Big River. So it's seeing that transition where 15 years ago, 20 years ago, EAFs would be only good for certain applications, not the highest quality. And today you're seeing further advancements in quality. And that in itself, I think that leads into the next technological step that we're seeing is with emissions, where we're controlling emissions. The US, really America as a whole, or North America as a whole, it has some of the best emissions footprint globally for steelmaking. It's the use of EAFs is huge, but also the blast furnaces. They're using iron ore pellets that are high quality and low emissions. And there's a lot of lessons for the rest of the world to learn as they're looking at decarb.
Yeah, absolutely. I was talking with a gentleman about recycling yesterday and how important that is to the whole decarbonization and the green cycle. And do you guys talk about that or cover that in your analysis, the recycling part of it?
Yeah, we cover a lot, as you kind of alluded to there. But yeah, we have metallics and whether it's scrap, pig iron, DRI, but we do have a somewhat new sustainability group, and it's a small group right now, but they're really diving into topics of looking at emissions, looking at the build out of hydrogen. I was just reading an insight before this about an expectation of, I think, hydrogen at the hydrogen cost. They said, there's expectations that it's going to be plentiful at a very low price come 2050 for everybody to be net zero. And they said, no, it's not.
Oh, really?
It's very unlikely. And if anything, a stretch goal would be, I think it was like $2 on hydrogen and probably not even, to 275. So
wow.
I can probably get you a link to that.
No, that's okay. I'd like to see that because that's not what I'm told. Like, I mean, I was talking to a guy that was, he's right in the hydrogen space, right? And he was saying, by 2050, it'll all make sense. And
right.
You're telling me the different, and I don't understand it enough, like the hydrogen part of it, to really to get it. But yeah, that's good. Well, yeah, send me a link to that.
Yeah,
That'd be great.
I'll do that. It's and you can still have a disruption that comes, a technological advancement that says all of a sudden you really unlocked something and it makes it more efficient. And that's great when that happens. I would expect something to come to help. But the whole decarbonization strategy and our sustainability group looks at it. We look at it in steel as well, as there's technological advancements, equipment advances, there's raw material, and it all is going to play a role. So it's not just you all of a sudden get to zero. You're going to be stepping lower and lower. And ideally you start at a pretty low level anyways.
Yeah. But it takes progress, right? It takes time. It's not just going to happen overnight. And this was one of my questions to this gentleman was like, what comes first? Is it policy or is it innovation? Because it always seems like the policies are always over the top. And it's like, are they pushing us in a direction, or what, or does it, the innovation, the idea of something happens first and then the policy comes after that because of lobbying? I don't know. What do you think about that?
Oh, it's an interesting question. The lobbying gets in there and it changes what some of that initial regulation is. It happens all the time. So I think it comes from, there was like a book, was it called, like Nudge, where you need that little push, that little incentive to push you along. And that could be having emission costs at
Yeah.
some level. Maybe it gets a little bit more draconian, and the price to emit gets very high, and it drops down even faster than others. So
Hmm.
that could that can drive a lot. I'm a big fan of market-based economics, so
Yeah.
um, I'd like to see that. I like to see the right incentives being used, and not necessarily ones that kind of incentivize, I don't know, loopholes or other behavior that wasn't necessarily thought of, but what comes out because other things just weren't available to really be reached.
Yeah. Interesting. I'm totally going off the question. Well, right. I never thought of this until some of the things you said was like, do you watch employment as a part of the economics and what's happening out there?
A little bit, not all that much. I mean, in the so much of forecasting what I look at, I feel like it's like a 3D puzzle, where the pieces are a certain size, and depending on what is happening, that size could shrink, and it just doesn't matter much anymore. And so, I've got that mental model that, well, we're at full employment. We can't hire enough people. We've got unemployment is record lows in the U.S., and we just can't hire enough people. So I'm just thinking of that as well. People are getting paid decent amount. They've got jobs.
Yeah.
That's good. I kind of focus on other things.
Okay. Fair enough. Fair enough. So what can somebody do? Let's say somebody's, watching this and thinking, I love this stuff, which I'm one of them. I love to learn what pieces of information, where can I go to get the information to understand the markets better?
There's a lot of information out there. If I think about this from the point of how did I learn a lot of what I do, I I am a voracious reader. We talked preliminary
You
discussion,
gave
and
me
I think
like
I dropped
five
like,
books to read.
yeah, I gave you some books, and crazy ones too, like maritime economics.
I
It's
couldn't find the
expensive, it's dry,
yeah,
but it's insightful in terms of like those markets and how you'll get a feel for what's really going on in container freight. And we'll see cycles, and it's the capacity of certain ships on certain routes. But no, it's reading a lot. I like a lot of behavioral economics, but also just to kind of learn more. I'd say Jim Rogers. He's the old investment guru. He's had a couple of books. Was it Investment Biker from like 1998 maybe, and then
okay.
Ventures in Capitalism, something like that, in maybe like 2002, where he rode a motorcycle around the world in the first one. Then he drove a car around the world in the second. And he talks about economic models and theories and price controls and what's changing in some of these markets. And it was interesting to read them both kind of at the same time, one after another,
Mhm.
where I could say, well, he thought about this in Russia and this in China, and then this kind of came true, or this something else came out. It didn't happen, but I think some books like that are really insightful to understand, like create a theory in your head, kind of practice it in terms of what's likely to happen and why.
Yeah, yeah, very good. I agree. Reading is amazing. Um, I started reading at like 27, 28 years old. Have and I didn't know what I was missing. And
Uh-huh.
and so now and the cost of the information is so low. I mean,
It really is.
what's a
Yeah.
book? I mean, 20 bucks, 30 bucks, 40 bucks, considering what you're going to get from it.
Yeah, I used to do too. I would buy it used on Amazon and then sell it right back as soon as I was done. And so I would minimize that cost. But now I'm like, I read that book, 20 years ago. I'd like to see it again. But I got rid of it for, finding a $5 spread or something.
Yeah. Was there a book that you mentioned on the Carnegie? What was it? Was it
Oh yeah.
uh,
Yeah, what was it?
that
It was a local writer in Pittsburgh, and Hell Finally Came, I think it was
and
called,
okay.
where it was talking through the whole history of U.S. Steel from uh, Carnegie, Frick, J.P. Morgan, all the way up
Hmm.
through the labor issues, 70s, 80s, and what it talks through some really great statistics about how much steel was really produced in the United States in the 60s and 70s, and how much some people thought needed to be produced further on. And it was like, I don't remember offhand, but I feel like it was like 200,000 tons or something, or 200, yeah, 200. What are we at? It was an incredible amount. I don't know, like a
Lots.
drop the number. It was much more than what we do today. And it was just because then you start to think about, well, how much steel intensity do we really need as a country, or any country do they need as they start to develop? And that's where you can get into the what's called S curves,
Yeah.
where China goes through that. It's a rapid rise because they're building infrastructure and buildings, and then it kind of slows down. They're building more consumables, so that changes. But that book was really quite interesting to get through the company, what happened there, what happened with automakers and labor disputes, and where we kind of got to where we were when that book published. I think it was published in the early 90s.
Right. So is steel production directly connected to where a country's growth spurts? Because I mean, China, as we all know, made a lot of steel in the past, what,
Mm-hmm.
10, 20 years. And then, I mean, before that was Japan and Germany. I'm just wondering, like, is there a connection there between, to use a fancier word, correlation between those two things, like the growth of a country and steel production?
Yeah, absolutely. And you see it in less developed countries where it's tied more because it's construction.
Right.
So it might be GDP can drive that, but if those are really a couple of really good examples, because if you think about Japan and Germany, it was all rebuild from World War II. So it
Okay.
was rebuilding construction, rebuilding factories. And then Germany became fantastic engineers. Japan was the center of manufacturing. Yeah, I mean, you can trace the center of manufacturing by looking at the bottom of Hot Wheels cars. You go back in time periods, it's, made in USA, made in Japan, made in China, made in Vietnam, and they start getting cheaper and cheaper as you go along.
Yeah.
But then you have also China, and they're a massive population, and they were urbanizing. They were developing infrastructure and urban cultures that drove a lot of steel consumption. So, yeah, I think it's a touch simple, but so many times simple is the right way. So, yeah, if you're just watching that GDP growth from,
Well,
say, China, higher GDP growth, especially now versus last year, it should be driving more steel consumption.
right. Right. So now that we have a lot of infrastructure that's failing in the United States and Canada, maybe failing is not the right word, but needs some updating.
Right.
Do you think is that part of what's influencing some of these mills for growth, or is it where we need to get to? And is the bill that's been put together for infrastructure actually going to infrastructure?
Yeah. The last question is kind of I find a little bit humorous, because when 2009, after the global financial crisis, there was the whole infrastructure bill for stimulus, and it's like you can't really have that for stimulus because it's going to take a few years really to start to happen, and then it goes on. They needed something more immediate, and so back then it was shovel-ready projects. And for steel, I used to joke that it was all the road signs that we would see that this lane pavement is from the stimulus bill. But now I think we have a real infrastructure program, and it's really been put together well. It's starting to get worked out. We're seeing more evidence from the aggregates people. I think some of the road work is coming. We're seeing more quotes for bridges, which is steel plate. We're seeing a lot of long products are going to be finding some benefit, whether it's some of the structures being built, some of the road work, just your general infrastructure, but it will support a lot. It's gonna still take a little bit more time yet, but we're seeing some benefits this year. Many more benefits to come in the next couple of years, which is good, because, yeah, as you said, infrastructure is aging. You need to continually reinvest in it to keep it up.
Yeah. Yeah, absolutely. Well, thank you for that. That's good. That's positive. In my view, anyway. So I'm curious about your experience going on the news. Bloomberg or CNBC. What was that whole experience like? I don't know. I mean, I saw the video. It's great, but they take little snippets, and I don't know if that's the best form of all the value you bring, sir.
Right.
But how was that experience? Was it valuable to your
Oh,
career? Or?
yeah, it was, and that was it was a really well timed, because it was recorded end of August, and it was right after I spoke at our steel conference, our big, large steel conference, the Steel Summit from Steel Market Update, end of August in Atlanta. It's the best place to be in steel at the end of August is Atlanta, where it's always hot. So
Yeah.
I was keyed up pretty well with everything I needed to know, and we talked through it all. And honestly, it feels like it's just mansplaining the entire time. You're just kind of loud and restating the question into the answers because I don't know how it's being done. They showed me a couple that they have done before, and I really like the style that they used. It was like a digital production, so it takes some time in editing. It ended up publishing almost a month later, right when prices had peaked, or right before they peaked, which was awesome for me because I was like the lone bear saying prices are unsustainable, they're going to crash. And we stopped seeing all the disruptions that kept it high. They just stopped, and all of a sudden it was prices turned lower. And we're still seeing ramifications of that with various service centers taking inventory write downs this last year. And but yeah, I mean, the experience it was pretty enjoyable. It was enjoyable to do because it was well timed. And then, of course, you get the email out of the middle of nowhere the one morning where, hey, this is live. It's like, do I want to click that? Do I really want to see it? Can I just let it go?
Yeah,
But it's always good to, I can send it off to, I send it off to my parents. They're like, hey, check this out. This is kind of cool. And that's like it. I wouldn't, do
yeah, man.
any other bragging any other way, but it was a fun experience.
Absolutely. Very cool. Somebody asked me a question on I'm definitely jumping around with my questions, aren't I? I'm not segueing everything, but that's okay. So I got asked on the podcast last week, what's happening with steel production and all that stuff. But he asked about Bethlehem Steel.
Mm-hmm.
And I wasn't sure where to go with that. So I kind of negated it and went around it. And I remember watching a video on it. It's like 2 hours long about what happened with Bethlehem Steel. But are they still in production today? What's going on with Bethlehem Steel? Anything?
Bethlehem went bankrupt in the early 2000s.
Okay. Yeah. So that's
There's assets that they own that are in operation. There's people that came out of their training program in the workforce today, and they are major people in the industry today. One person I worked for at Severstal was one of those. Tom Marchak, great guy. You drop
yeah,
his name anywhere, and people are like, "Oh, I love Tom. He's such a great guy," and he truly is.
yeah.
I mean, I had a discussion with him the other day about some people in his specific training class that are still around and still in the industry. So there is the legend of Bethlehem Steel. They're around, but not as a company anymore.
Yeah. Okay. Fair enough. Good. I'll remember that for the next time. And US Steel, what's going on with? I mean, that is just like a dynasty. It's an old company. It's been around forever. I mean, are they still a big player in comparison to Cleveland Cliffs? I mean, are they up there with them?
Yeah, US Steel is an interesting one because, as you said, they're an old company. They're probably the newest old company that we've got out there now.
Oh,
They've really gone through a bit of they've gone through a big change in the last few years where, leading up towards 2018, 2019, 2020, they had a high amount of debt. They were making profit 1 year out of four. Some really tough cycles that they had since the whole global financial crisis. And they made a big bet on going into EAFs, going into Big River Steel. They bought Big River Steel. Big River Steel was expanding at the time, so it doubled production. Now US Steel is doubling it again there, and they're putting in some really great technological equipment. Was it the endless slab line or endless casting line that they're putting in there, which is really good. And from everything that we've seen, it works well with multiple EAFs feeding it just for efficiency, and it's a high quality product. So it's going to be interesting to see that come out. But they've done very well in turning everything around. The pandemic's had a big role in that with the cycle that allowed them to quickly pay off a lot of extra debt. Balance sheet is amazing. And I think they have some really fantastic investments coming out in the future. And a number of mills do too. I mean, Nucor, Steel Dynamics, they're putting a lot of really good investments out there. But yeah, US Steel is very much relevant today, more relevant today than it was 5 years ago.
very good. That's good to hear. Yeah, because I always look to them as like a leader, right? I mean, I have for years. Like who's at US Steel? What are they doing? It's nice to see them come out of that. Cool, man. So what else is happening that we need to know in the steel markets?
Well, when will this publish? We can date it pretty quick.
Probably in a week.
Yeah. So, I mean, we are seeing prices pick up quite a bit faster than anybody really expected. It's a bit of, I think, an echo boom from the whole pandemic price cycle where we are
Hmm.
seeing, we're seeing some instances where this whole recession debate, we've seen sentiment indices falling into terrible contractionary territory. Like if you see consumer sentiment, leading economic indicators are the latest one to tip lower. PMI, manufacturing PI is contracting, and I think it's at a level that suggests manufacturing recession. We're only now starting to see industrial production data turn lower. It's still positive for demand of steel goods, yet it's easing back. Um, but amongst that, we've seen inventories correct. Mills get a little bit more controlling in terms of what they're producing and why. They're selling what they want to sell to the people they want to sell to, like we kind of talked about earlier. And so
Hmm.
we're just kind of in a spot where imports are limited into the United States, less so in Mexico, but it's kind of a nice balance for mills. They're seeing still some really good margins, still some fantastic earnings, and we are seeing that prices go up. And I made a comment a couple of weeks ago. I was at a conference that we run in Tampa. I made a comment in there. I was moderating a panel, and I said, there's no exchange on steel, so the mills actually have to go out there and announce price increases and then try to collect them. So they're absolutely right in announcing higher prices because they're seeing their lead times push out, and that's even if they're acknowledging lead time. Some just don't talk about it too much. So what might look like 5 weeks might really be 6 if you include, the whole supply channel.
Hmm.
And so yeah, it's longer lead times, tighter inventory, stronger demand, some seasonal pickup in that demand component, but also managed production from the mills.
Yeah, yeah, very good. There's some commodity trading platforms, mainly in the steel products, that are, rearing their head, and it's great, in my opinion. I'm curious what your thoughts are on those types of things where they in communication with the producers, and
Mhm.
then they'll deliver that through an online portal to a user. I mean, what do you think about those types of things? Is it a good direction to go for the industry?
Yeah, I think they showed that they have some value during, the tightness of supply in 2021, 2022. And now I think I've heard more comments like, well, they're trying to evolve more into like what a asset light service center might be, where they don't own inventory, they don't own processing equipment, but
Hmm.
they're matching up supply and demand pretty effectively, and they're disrupting the industry as they do that. So they have some pretty nice technology. They're able to get, if you want to get a quote on something, it's probably a first stop just to look to see what they have. I don't know what the listings there look like, but
Hmm.
the one thing though, the one thing that they do miss, and I think it's pretty important right now in the industry, is you don't have that one-to-one relationship. You don't buy from 3 local service centers who are going to take you out to lunch once a week, one person each week, or
Hmm.
wherever, get to a game. You don't have that relationship where you can go in
Yes.
there and see your order getting processed or see what's going on. And I think that might limit some of their growth, but it is technologically advanced in terms of what they're doing. So we may see the market further embrace that. So it's kind of an interesting space to watch.
Yeah, it is absolutely interesting, but I love that point, and I never thought of that, where the relation, because it's such a relationship centric industry,
Right.
that would be a great addition to it. I don't know how you do that, but that's a good point. Thank you for that.
It really just may be something to get over. It's just the latest wall put up in front of them. And they're a
What?
disruptor, so they should face that all the time.
Yeah, but at the same time, I mean, we don't want to lose where we've come from. It is my feeling about it, right? It's such a relationship, like I said, relationship important business industry. I think they all are, but we're talking about ours. So
Mhm.
um I don't think we want to lose that because we've lost it in a lot of places in our society, right? So do we want to lose that in ours? I don't know.
Right.
Food for thought. Um, I'm curious about, we talked about this last time and I forgot to bring it up when we were talking about China. The What are we dealing with tariffs and stuff? Is that still happening? The Trump tariffs that weren't just him, that came before him, but he got all the blame. And this isn't one side or the other. I'm just curious, what's happening with those today.
Right.
And then the China's production, have they continued with the same production, and are they still offloading it to other countries and stuff?
Yeah. So in the US, there was a number of anti-dumping duties and countervailing duties put on to a number of countries. China was a main target in those for cold rolled steel and galvanized steel or coated, and some other ones as well. China was a big exporter to the United States, 2014, 2015, and in years past. Not so much on hot rolled because there were already the various duties on those as well. But when the Trump tariffs, the Section 232 was tariffs put on to imports everywhere because of national security, and they chose 25% for steel. And it limited supply of steel into the United States, but it didn't really solve the issue of national security. The point really should be, if we need a viable steelmaking industry, we should be putting tariffs on steelmaking raw materials that we're importing as well. If we really can be self-sufficient, we have raw materials, make it maybe more North America. And we wouldn't have found that issue with pig iron from Russia a year ago to be such a big issue. But yeah, the Section 232s were changed around almost immediately. So there was with NAFTA 2.0 being signed, USMCA, Mexico, Canada are able to trade freely with the United States. There is some protection built up in there yet. We've had the UK has an agreement, Europe has an agreement to trade freely again, but it's limited by a quota. Brazil has a quota. Australia can trade free. Japan has a quota that's new. Korea has one as well. So we've kind of opened it up, and really it's been a little bit of a blessing in disguise for probably the current administration, because they're using that as leverage to strike some good trade deals. Mm-hmm. So it works out. We really may not need so much import protection, just simply because we have plenty of steelmaking capacity, or at least what's being built now. And it's some of the lowest emissions in the world, which is more and more of a factor for so many buyers. Sure. We'll see how it really turns out, but I think some of those will stay on forever. I think there's going to be some countries we just don't need to see them lifted. One of the big misnomers with that, though, is when they started being talked about and came about in 2018, it was always China. China is the boogeyman here because it's cheap Chinese steel coming into the United States. And I remember at the time that for all steel imports into the United States, China was 2%. They were really not even listed. And from what I know, some of the imports were authorized by the government to come in without any of the anti-dumping duty attached to it. So there were certain suppliers that could get it without that because what they made was important and they couldn't get it somewhere else. So it was really more of a support for domestic steelmaking, and it provided help for sure. But there's been some movement since it came about.
Okay. Wow. Very good. So that support continues today, I guess. I mean, based on the information we have, right?
Right. Yeah. And we're seeing that come through now, where with prices getting raised up to very high levels. I have some traders I'm speaking with, some international traders, like, oh, all of a sudden some of this product from wherever kind of makes more sense into the US for buyers, because their next best alternative is $1,000 in the US, or they could wait a little bit and get it cheaper from an import source.
Yeah. Wow. Very interesting. So 2% only. That's not bad. So that's definitely not what you hear, right? It was
right.
always
Yeah.
It was always China was the boogeyman, like you
yeah.
said.
I would get a lot of strange faces, like, this guy doesn't know what he's talking about. And I'm like, look at this website. It's right here.
Yeah.
But, yeah.
Huh. Very interesting. All right, man. Well, look, it's been a pleasure, and I always look for advice at the end. What is something that you can give to people that want to be like you, or want to be in the industry, or people as a whole in the industry? What's your advice to the industry right now?
That's such an open-ended question.
I know.
For my team of analysts that I have now, I'm constantly saying, just be humble, be curious, try and learn as much as you can. There's so much knowledge out there, and you never know where it might come from. But just soak up as much as you can, and just ask that question: why is this? And
and go to Josh for your data.
Sure. Yeah. I mean, We have a tremendous amount of data.
Yeah.
And the one thing certainly we have, the biggest thing people know about us in North America is our prices. So our price of hot rolled coil, cold rolled galvanized, it's used in 94% plus of contracts. Virtually all contracts are tied to our price, and it's tens of billions of dollars for the price assessments that we do. So
Wow.
I mean, it's very serious stuff. We take it all very seriously, but yeah, we're very open to speak with people and yeah, help them along.
Excellent. Excellent. So where do people find you?
Uh, our main marketing website is crugroup.com.
Okay.
And then we have a client one as well, which is, yeah, if you thought we had a lot of information on that site, we have a tremendous amount on the other one.
Okay, cool, man. All right. Well, I will put all those links in the description, and I appreciate your time very much. It was an honor.
Cool.
All right, man. We'll
Thanks,
be in
Greg.
touch.
All right,
Thanks,
thanks.
man.
Bye.
Okay, bye-bye. Greg Sheldon here, your host of Metal, Steel, Manufacturing, and Business Pro podcast, where you learn everything about the metals and manufacturing industry that make your modern day life possible.